Okay, everybody, here we go. It's me, Gregory Mannarino. Tuesday, November 14th, 2023, and this is my pre-market report. Where do you want to start with this? How about it appears that our lovely, caring representatives are going to put forth some kind of a kick the can down the road, as we talked about yesterday, situation, some really extravagant two-tiered way that they're going to conjure up cash to fund the government. Again, of course, there's not going to be any real budget or anything anymore. We don't do this because it can't happen, as we all understand the current situation. But see, not a single one of these freaks are going to let you know what's really going on. That without relentless, expanding, debt pulled into the now, it's just, it's over. We'll go back to a Mad Max scenario, which we're going to get to real quick. There's just no doubt about it. That's what's being set up here by the central banks. Now, talking about banks, we found out some other information here that you might want to know about, because you and I have been so far ahead of the curve on this, it's frightening. Well over a year ago now, we talked about issues that just were flying around our heads. No deposits, no deals, no loans. That was just the groundwork of the current situation with the financial system as a whole. Now, we're finding out that withdrawals from the banks are getting worse, not better. Look, there could be a lot of reasons behind this. People obviously can't make ends meet. They're draining their accounts, just trying to pay bills. They're also borrowing their way into financial obscurity. You all know that. We also are seeing debt defaults skyrocket across the board. And another thing, as you are well aware of, is this rising rate environment has caused the commercial banks' balance sheets, who are loaded up on debt that's yielding nothing, to literally evaporate. So let's just put the little pieces together here. If you believed before that the troubles for the commercial banks was bad, it just went from bad to worse. Again, withdrawals continue to skyrocket. People are not that stupid. Maybe they are. I don't know. I would like to believe that they're not. I think people are pulling their cash out of these institutions because they realize there is a serious underlying problem. That's my take on it. There's a lot of facets to it. I believe we're going to see a lot more failures moving forward. I believe it's very possible that a major institution or two could go down as well. The FDIC has already told us there is a major problem here with the banks. Hundreds of banks, maybe even thousands, we're not allowed to know, could possibly close. And the kicker here is there's no warning. When a bank closes, nobody tells you. The FDIC doesn't let you know. The bank itself, management doesn't let you know. They just close, and then you're just stuck holding the bag. Now, I've been trying to keep all of you ahead of the curve on this thing. Pull your cash out. Get your cash out of these institutions, the commercial banks. If you have to keep it in an institution, I would say put this in a credit union. These are safer. They're not. Nothing is completely safe, people. Every time I mention this, I get slammed about it. Nothing is completely safe. When the cash leaves your hand, okay, and goes into some kind of institution, there is counterparty risk. But understanding that credit unions take less risk, let's put it that way, than, let's say, a commercial or an investment bank does. Well, then that's where you should keep your cash there. And only keep in these institutions what you need to pay bills. The rest of it, find somewhere else to put it. I can say this with a high degree of certainty. The financial system itself has never been in worse shape than it is today. Forget about the last financial crisis. This, what we're experiencing now, makes that look like a walk through the park on a nice, beautiful summer day, eating an ice cream cone. But they're not allowing you to know this. And I really feel that this is another thing that's going on here. We understand, that withdrawals from these institutions is skyrocketing. All right. Nobody knows until everybody knows. They can't let people know that these are bank runs. They're going on right now. They can't let people know that. I've heard from many of you who are trying to take your cash out of these banks and you're being prevented from doing it. That is an interesting phenomenon. Again, there's not enough cash in the system. You understand? And on top of that, we're facing this liquidity crisis, which is getting much, much worse by the day. Anyway, look, so the deal with the banks is multiple fold. Massive withdrawals like we've never seen before, ever, but you're not allowed to know that. With regard to these banks having to deal with bad debt on their books, and I'm not just talking about the fact that they loaded up on treasuries that are yielding nothing, that's caused their balance sheets to evaporate, but I'm talking about personal debt, household debt, consumer debt that's being defaulted on at its highest pace ever. Does this sound familiar to a certain degree? I think it should, because in a lot of ways we're seeing a repeat performance of the last financial crisis, but this is much, much worse. It's much, much worse. And if you think that they're going to allow the financial system to completely collapse on itself, to a certain degree you may be correct. It's a consolidation of the system, and I believe you understand that all, but you're going to pay for it. You're going to pay for it all, like last time. You're paying for it now in the form of inflation. Oh, by the way, we're going to get some kind of inflation number come out this morning. I think it's about 20 minutes from the time I am doing this video blog, and understand that these are complete fabrications. They have no bearing on reality. Okay, with that said, let us put that aside for a moment. Let's move forward. I'm getting a lot of questions from all of you, and I appreciate them, with regard to rate cuts. I've spoken about this already, but I think it's kind of important. In my opinion, the Federal Reserve is, in fact, going to start cutting rates sooner than later. I think they're going to... I don't believe a rate hike is in the cards. Why? They already have the consumer by the throat, which was their goal. They already have cut off the availability of credit to small businesses, which was their goal. We're watching small businesses collapse at their fastest pace ever, more so than the scamdemic, more so than the financial crisis. And this is deliberate as well to fulfill the corporate agenda. Rate cuts, okay, are going to allow, at least probably for the most part, the commercial banks, the big Wall Street institutions to survive. And I think we're going to see mergers too, bank mergers, a lot of mergers moving forward. These are the things that are most likely to happen. I'm not saying these are written in stone, but just gauging from the current situation, looking how things are playing out, understanding the current situation and the current plan. It just makes sense to me. Now, also, another reason the market, and I covered this yesterday, and I got a lot of flack about it. I said the most likely scenario, and I've been saying this now for, I don't know, a week. Well, ever since the Federal Reserve decided to pause, and we know what the Fed is doing here. They're keeping rates suppressed. They're dumping dollars. They're buying foreign currencies here. This is massively stock market positive. If they can get crude oil to follow, and I think they're going to, crude oil here appears to be bottoming out. The market will rally through the end of the year. Again, why? This is for the big wig fat cat CEOs at the corporations whose year-end bonuses are based upon one thing: year-end stock price. It's a game, people, and you and me are being played. But that doesn't mean we can't capitalize on the situation, but at least remain aware of what's going on, or at least remain aware of what's going on here. That's why I am saying what I'm saying. Most of you think, no way, Greg, the market's going to crash before the end of the year. Look, I've been hearing this, and so have you, from a lot of people for a very, very long time, and you and I have been right. I don't believe they're done yet. They're going to continue to pump the market with more easy money, which means rate cuts are coming. So that's my stance on it. You're entitled to your own opinion on it, but that's one of the main reasons why I've remained long. I am majorly long this stock market. I continue to buy. I continue to buy this market as well. You all know that. I also continue to bet against the debt, become my own central bank. You understand all this stuff, people. Your perspective has got to be longer term. You have to be more or less diversified into a lot of different assets if you want to try to get through this thing. If you can't, then you got to just be invested in one thing. And that, of course, is going to be physical silver, at least in my opinion. I don't sell this stuff. It's funny. A lot of people say, "Oh, Greg is pushing silver." I don't sell silver. Okay, I'm just telling you what I think, and it doesn't mean I'm right either. All right, you are allowed to have a different opinion than me. You're allowed to see things in a different way than me. Okay, who am I to say what you're supposed to believe? I don't want you to believe anything that I say. I want you to come away from these video blogs thinking. I just want you to think about the current situation and what it means for you. Before we end this video, let's go look over here at the market. Stock futures are flat this morning. Gold is under a little bit of pressure. Silver catching a bid. Dollar is lower. Fractionally lower. The 10-year yield is stable. If they can maintain that stability here and weaken the dollar, the stock market's going higher. Should be pretty obvious, okay? Cryptocurrencies are under some pressure today. That's the story. That's where we are this morning. Let me make sure I covered everything I wanted to. The biggest thing with this video, people, is, again, and I want you to take this away, the trouble for the banks, if you thought it was bad before, it's getting worse. And take action here. Again, don't believe anything I'm saying. Do your own research. People know the truth when they hear it. If we understand that debt defaults on these banks are skyrocketing, if we understand the commercial banks' exposure to debt that's yielding nothing here, we understand that withdrawals from these institutions is not stopping. It's getting worse. What do you want to do about it? Okay? Think about what you want to do about it. And I don't think it's a hard decision, honestly. Why keep your cash in a commercial bank when you can have a little more safety in, let's say, a credit union? You understand? But again, don't take my word for this. Do your own research. Think about what it means for you. Pretty much that's where we stand. All right, people, look, this guy here loves you a lot. I will see you later. 4:05 p.m. Eastern Daylight Time for the live stream. Let's get more people involved over there. It's fun. It's nice to interact with all of you. Have some questions ready for me. All right? I'll see you later.